In this video, you'll learn how to build a powerful diversified dividend portfolio that can provide consistent cash flow and financial security. Many investors struggle to create a balanced portfolio that not only generates income but also minimizes risk, especially in volatile markets. When it comes to investing, it's easy to get caught up in the excitement of chasing hot stocks or trying to time the market. But the truth is, most investors are looking for a way to generate consistent returns without taking on too much risk. One approach that has been proven time and time again is dividend investing. By focusing on high-quality dividend stocks, investors can create a portfolio that generates regular income and has the potential for long-term growth. The problem is, many investors don't know where to start. They might pick a few dividend stocks that have done well in the past, but they don't have a clear strategy for building a diversified portfolio. This can lead to a portfolio that's overly concentrated in one or two stocks, or that's heavily weighted towards one particular industry or sector. And when the market takes a downturn, these investors can be left exposed to significant losses. In order to build a truly diversified dividend portfolio, investors need to take a systemic approach. This means identifying high-quality dividend stocks across a range of industries and sectors, and then combining them in a way that minimizes risk and maximizes returns. It's not rocket science, but it does require a clear understanding of the principles of dividend investing and a willingness to put in the time and effort required to build a truly diversified portfolio. Despite the challenges, the rewards of dividend investing can be significant. By generating regular income and providing a relatively stable source of returns, dividend stocks can help investors achieve their long-term financial goals. We'll explore the key principles of dividend investing, including how to select high-quality dividend stocks, the importance of diversification, and the role of reinvesting dividends for maximum growth. One of the most important things to understand is that dividend investing is a long-term game. It's not about trying to time the market or make a quick profit, it's about building a portfolio that can generate consistent returns over many years. And the key to success lies in selecting high-quality dividend stocks that have a proven track record of paying dividends and generating returns. When it comes to selecting dividend stocks, there are a few key criteria to look for. First, we want to focus on stocks with a strong history of paying dividends and a commitment to continuing to do so in the future. This means looking for companies with a solid balance sheet, a strong cash flow, and a history of dividend payments. We also want to focus on stocks with a relatively high dividend yield, but not so high that it's unsustainable. And finally, we want to look for stocks with a strong track record of growth and a solid competitive position in their industry. Diversification is also critical when it comes to building a dividend portfolio. This means spreading our investments across a range of industries and sectors, and making sure that no one stock or sector dominates the portfolio. By diversifying our investments, we can reduce our exposure to risk and increase our potential returns. Another key principle of dividend investing is the importance of reinvesting dividends. When we receive dividend payments, we have the option to take them as income or reinvest them in additional shares of stock. By reinvesting our dividends, we can accelerate the growth of our portfolio and maximize our returns. The turning point in your investing journey will come when you understand how to identify undervalued dividend stocks that have the potential for both income and capital appreciation. One approach is to look for stocks that are trading below their intrinsic value, but have a strong history of paying dividends and generating returns. Another approach is to focus on stocks that have a high dividend yield, but are also experiencing growth in their underlying business. By combining these two approaches, we can identify undervalued dividend stocks that have the potential to deliver strong returns over the long term. When evaluating dividend stocks, it's also important to consider the underlying business fundamentals. This means looking at things like revenue growth, profit margins, and return on equity. By understanding the underlying business, we can get a better sense of whether the dividend payments are sustainable and whether the stock has the potential for long-term growth. By taking a systematic approach to dividend investing, we can identify undervalued stocks that have the potential for both income and capital appreciation. And by combining these stocks into a diversified portfolio, we can generate consistent returns and minimize risk. The turning point in your investing journey will come when you understand how to identify undervalued dividend stocks that have the potential for both income and capital appreciation. It's about developing a keen eye for spotting opportunities and a disciplined approach to building a diversified portfolio. With the right strategy and the right mindset, you can build a powerful dividend portfolio that generates consistent returns and helps you achieve your long-term financial goals. By following the strategies discussed, you'll be better equipped to build a diversified dividend portfolio that can withstand market fluctuations and generate reliable income. If you found this video helpful, be sure to check out my other videos on investment strategies and share your thoughts in the comments below.